Today, we're cracking open the playbook used by the pros on Wall Street. We are going to build an actual professional framework for spotting those explosive, high-performance stocks, the ones they call super stocks. And this comes straight from the perspective of a 50-year market veteran.
So the big question is, how do they actually do it, right? How do these pros find these monster stocks that can double, triple, or more way before they ever hit the headlines? Well, it might seem like some kind of dark art, but it's really not. It's a solvable problem if you have the right framework.
And here is the absolute core truth that underpins this entire strategy. These massive, powerful trends that create super stocks, they aren't random, and they are definitely not driven by you and me. They are created by the deliberate, sustained buying from huge institutions. We're talking pension funds, mutual funds, the real giants. So our job isn't to create the trend. It's to learn how to track their footsteps.
Okay, so let's dive in. To find these stocks, we first need a map of the territory. We have to understand where, in a stock's entire life cycle, these amazing opportunities even exist in the first place.
You see, pretty much every stock moves through 4 distinct stages. Stage 1 is the base, or the neglect phase, where nobody cares and the price just drifts sideways. Stage 2, that's the advancing phase. This is our battleground. This is where institutions are buying like crazy and all the magic happens. Then you have Stage 3, the topping phase, where things get volatile as they start to sell. And finally, Stage 4 is the long, painful decline. This map is absolutely crucial because it tells us exactly where to focus all our attention.
And this slide just hammers the point home. Forget everything else. The only place we are ever going to hunt for super stocks is in Stage 2. Trying to buy in Stage 1 is just dead money, and buying in Stage 3 or 4, well, that's just a recipe for disaster. So all of our tools, all of our focus is dedicated to one single task, identifying a stock as it enters and moves through Stage 2. So how do we do that with any kind of precision? Well, we use a really powerful 3-part system. It's designed to decode the market signals and confirm that we are right in that sweet spot. We call it the Triad of Alpha.
Think of it like this. First, we need to find the fuel. That's the big institutional money flowing into a stock. Next, we check the engine to measure the power and acceleration of the trend. And finally, we need the precise trigger, that exact moment to enter the trade for maximum impact. Fuel, engine, trigger.
All right, let's start with the most fundamental piece of this whole puzzle, the fuel. We need a way to actually see if the big institutions, the smart money, are quietly buying up shares before the rocket takes off.
And our tool for this is called On-Balance Volume, or OBV. It's actually elegantly simple. Every day if the stock's price closes up, we take that day's entire trading volume and add it to a running total. If the price closes down, we subtract that day's volume. Over weeks and months, this running total gives us this incredible view into the cumulative buying and selling pressure. It lets us spot the institutional footprint when it's still totally hidden for most people.
And this all comes from that classic Wall Street saying, volume precedes price. What that really means is that the actions of the big money, their buying and selling, it shows up in the volume data before the price makes its big explosive move. Volume is the ultimate tell.
And that's exactly why we call OBV our lie detector. You see, a stock's price can be totally flat, just moving sideways for months, making you think nothing is happening. But underneath the surface, if institutions are quietly buying, that OBV line will be steadily climbing, exposing the truth. It reveals what we call quiet accumulation.
Now, this is where it gets really cool. This is the most powerful signal OBV can give us. It's called Bullish Divergence. So let's break this down. On the left, you've got the price making a scary new low. Looks pretty bad, right? But now, look at the OBV indicator on the right during that same time. It's making a higher low. That is a huge clue. It tells us that the final pushdown in price had no real selling power behind it. The sellers are exhausted. And even better, smart money is using that dip to buy shares on the cheap. It's a classic bear trap, and it's often the very last shakeout before a major launch. So, we found the fuel. We can see evidence that smart money is getting in. Now, we move to the engine. We need to measure the actual power and acceleration of the trend.
For this, we use the MACD, and I want you to think of it like a tachometer for our engine. Why the MACD? Because it's specifically built to measure the relationship between short-term and long-term momentum. It doesn't just tell us if the price is going up, it tells us how fast it's accelerating, which is absolutely crucial for finding these truly explosive super stocks.
Okay, and this right here is where we separate the amateur approach from the professional one. Most traders, they learn one basic MACD signal, just wait for it to cross back up above the zero line to buy, and frankly, for the truly powerful stage 2 stocks, that signal is almost always too late. You miss the best part of the move. So we're going to use a much smarter, much more subtle technique. We look for what's called the zero-line turn and refuel. So here's how it works. The stock is already in a strong uptrend. During a normal, healthy pullback, the MACD line dips down towards the zero line. But because that underlying trend is so strong, it gets support right there. It literally bounces and turns back up without ever crossing into negative territory. This is like a fighter jet refueling in midair. It's a massive confirmation that the trend is powerful, and it's getting ready for its next big leg up.
Okay, so the fuel is in the tank. We've confirmed that with OBV. The engine is revving hard. We've confirmed that with the MACD. Now for the crucial third pillar. We need that precise final signal to launch.
And our trigger is a beautiful price pattern known as the Volatility Contraction Pattern, or VCP for short. This is the visual proof that supply and demand are reaching a critical tipping point. As this pattern forms, the price swings get smaller and smaller and smaller, and that tells us that all the sellers, all the weak hands, have finally been shaken out of the stock.
And you can literally watch it happen on a chart. The first pullback might be a pretty deep 25% drop. The next one is shallower, maybe only 15%. The one after that is just 8%. This tightening action shows us that the supply of stock for sale is just drying up. The shares are consolidating into the hands of strong, committed buyers. By the very end, the stock is basically a coiled spring, just ready to explode upwards on even the slightest hint of new demand.
And the real key here, the thing you're looking for, is that final moment of calm before the storm. Right at the very end of that VCP, you will often see a trigger bar, a single day where the price barely moves and the volume is exceptionally low. This is the ultimate tell. It's signaling that there are pretty much no sellers left. The market is just holding its breath right before the launch.
So, fuel, engine, and trigger. It sounds great in theory, right? But let's see how this whole three-part system works together in a real-world example to create a super high probability setup.
And we're going to look at a massive winner that everybody knows, Nvidia. We're going to go back to early 2023, right before its huge AI-driven run really took off. Okay, this is where the magic happens, what we call three-way resonance. Let's walk through it. First, the fuel check. Look back to late 2022. The price of Nvidia was making this final, discouraging low. But look at the OBV indicator right below it. At the exact same time, OBV was making a clear higher low. That is our bullish divergence. The public was selling, but institutions were quietly buying every single share. The fuel tank was being filled. Next, the engine check. As the price started to recover, look at the MACD. It made that powerful, decisive cross right up through the zero line. That's not just a little trend change. That's the engine roaring to life, confirming that momentum had flipped from bearish to bullish. And finally, the trigger. After that initial move, the price settled into this beautiful volatility contraction pattern. You can see how the pullbacks get tighter and tighter. And then boom, it broke out on that huge surge of volume. That was the final launch signal. Fuel, engine, and trigger all align perfectly. That's ignition.
And that really brings us to the key takeaway, the big question you should ask yourself. Are you just watching the price ticker go up and down, or are you learning how to read the market's full story? The story of supply, demand, and the institutional forces that truly drive these super stocks.